thank you both for being with us. Rohan, I'll start with you. So what do you think OPEC Plus is really saying at this point, right? I mean, because there are some folks who were thinking they might see some more cuts, especially since, we're not really seeing great demand for oil.
Well, I think right now, just given where prices stand currently, we're, in the high 30s. It's at a 3-month high, but still not enough where a lot of these members can actually make money at these prices. We've seen reports come out that say there probably are going to be an extension of these production cuts, but the problem is compliance right now. A lot of these small OPEC nations are just not compliant with what they previously agreed upon. So we do see an area where, there could be an extension of these production cuts, even though, as you mentioned, Nicole, the meeting may have been delayed a week from tomorrow's previous schedule. But it looks like this is going to go on for another month through July, and then there's going to be a 2 million barrel reduction from there on out. Our view right now on this is that oil prices have been so volatile that it's hard to time the market at this point, just given where, we're coming off COVID-19 ramifications, economies reopening, unstable production levels, both globally and with OPEC. We're advising to be a little bit more defensive with your energy allocation, stay within, say, the pipeline space, which we kind of like as less so on the margin for oil prices and more so benefiting from a potential resumption in U.S. production.
Rohan, you mentioned some may not be compliant, some of the countries. Do you know which countries? Can you name any?
Yeah, so many of the smaller nations, if you look at some of the countries such as Kazakhstan, Nigeria, Iran, Iraq, these are countries who, they need much higher levels of oil prices in order to balance their fiscal budget. So that's part of the reason why they have compliant.
Ed, tell me your expanded thoughts here. We just gave Rohan a great chance to talk about OPEC, the cuts, now pushing it back. What's your outlook here for oil and what we may see, Ed?
I think right now, as Rohan has pointed out, we have seen prices rebound tremendously. But I think we're going to start to look now at the demand side of things. Is how is the reopening of the global economy taking hold? Are we going to continue to see momentum? And when we take a look at today's EIA crude inventory report, there are kind of some signs that, maybe this pickup is not as strong. We saw some significant builds with gasoline and distillate inventories, and I think there's going to be a little bit of concern that you're not going to have that swift recovery in demand, and that's going to probably start to weigh on prices. And you have to remember what triggered a lot of this price war between the Saudis and Russians. It's about market share, and if we continue to see prices climb higher, U.S. shale is raring to go. They're ready to ramp up production back up if we have WTI back above 45, around 50. So I would, it would be like, why did we go through all this if, you're going to see U.S. shale kind of save a lot of the market share. So I think you're going to probably start to see a little bit more tension between these OPEC producing members because they're going to want to win back this market share, and they're desperate for cash. So I think you're going to start to see the compliance side be the key story. And I think you're going to probably start to see more of a choppy trade going forward, and probably there's going to be limited upside, I think, in the short term for oil, unless we have another surprise risk from whether it's hurricane season or there's so many that we could label.
Look, I know that you both are watching the stocks closely, and you're not stock pickers per se, but we look at refiners, we look at midstream, we look at exploration and production. I know you work with the ETFs, Rohan. So, I mean, is there a certain area? And I also saw bankruptcy, right, for a name like Whiting Petroleum. Will there be more mergers and acquisitions? What's the outlook for somebody who likes investing in oil and energy stocks?
Well, for nearly all the reasons that Ed mentioned, we are trying to take a step back and be a little bit more defensive in this area. So we like the pipeline stocks more so in midstream. I think when you look at the three major parts of energy, you've got the exploration and production side, you got midstream, and then you've got the refiners. On the refiners, the crack spread is definitely tightening up. Exploration prices have been really volatile. So we do like potentially a resumption in U.S. energy production benefiting the pipeline. So these are also the areas where you sort of get paid a dividend. So we also like that area right now within energy.
Ed, I have 20 seconds. Your thoughts? Do you have an area you like? Names you like?
Well, I think you're going to still want to stick with the big giant oil producers, the Chevrons, the Exxons, because they're the ones that have survived several historic, tense moments for the oil sector. And right now, you're probably going to see them defend their dividends, and I think there's still upside there. There's going to be consolidation, and you're not going to
people
see
like
those
that.
giants go away.